Then the third one will be, we have mixed income. Mixed income of self-employed person. Now what is this mixed income? Say for example, I'm a producer. Okay. I have my own producing enterprises in which I work there. Let's say I'm doing some kind of production. To produce something, if I am making use of my own factors of production, that is land, labor, capital, and entrepreneur. Okay, so I said I'm producing something. I have my own production enterprises. Okay, in that I'm making use of my own factors of production. For this, I will be getting income, right? Which is in the form of, say for example, land, rent, labor, wages, capital, interest, and entrepreneur, we get profits. Right, okay. Now, these income, which is in mixed form, is earned by whom? Me, producer. This is called as mixed income. Is that clear? Okay. Mixed income refers to now the income of the self-employed persons, right? Who is using their own factors of production, that is labor, land, capital, and entrepreneurship in their own business, or we can say in their own production enterprises, or in their household enterprises, is the mixed income of the self-employed person. Is that clear? Okay. Now see here, we are done with the classification of factor incomes. Now, we will see again in brief these classification of factor incomes. So the first one is COE, right? Then we have operating surplus and mixed income. Right? Sum total of all these, that is compensation of employees plus operating surplus plus mixed income. These are nothing but factor incomes, right? Is that clear? Okay. If we do the total of these factor income or sum total of these factor incomes will be equal to NDP at factor cost, which is nothing but this is domestic income, right? NDP at factor cost is domestic income. Now see here, sum total of these factor incomes which is generated within the domestic territory of a country during 1 year is called as domestic income. Alright, okay. Now this becomes the formula for this income method, or I will say the base which you have to use to calculate any problems of income method. Is that clear? Okay. So, in this, we have 4, right? Wages and salaries, in cash, payments in kind, employer's contribution to social security, and pension on retirement. Operating surplus comprises of 3, rent and royalty, interest and profit, and mixed income. Is that clear to you? Alright. So this is all about the classification of factor incomes. Now, we will see some precautions to be taken while measuring national income using income method. Okay. The first precaution is transfer incomes. Transfer incomes are not included. Okay. These incomes are not included in the estimation of national income using income method. Now why transfer incomes are not included? As I said before, that these are unearned income. And in the estimation of national income, only earned income is included, unearned income is not included. Right? So let me give some examples of transfer incomes. I said before, gifts, donations, right? Apart from it, scholarships, also old age pensions, right? Old age pensions. So these are transfer incomes. Alright. Second precautions that we have to take is income which is earned from illegal activities. Income which is earned from illegal activities are again not included in this method. Why these income which is earned from illegal activities are not included? It is because these income are considered as black money. These income are black money. Not only this, under this one, production is not taking place. If production is not taking place, then income generation is also not taking place. Right? Third one is commissions. I'll take it together, okay? Brokerage. Commissions which is earned from the sale and purchase of second-hand goods. This one is also in value added method, right? So commission which is earned from sale and purchase of second-hand goods. One thing, brokerage, which is earned from the sale of shares. Okay, so commissions and brokerage, these two are included in this method of measuring national income because these two are, is it earned income? Right. These two are earned for rendering their services. Right. So this income is also included. Is it clear? I said commission which is earned from sale and purchase of second-hand goods, brokerage from shares and bonds, right? So income which we get from these two activities are included in the estimation of national income through this method, using this method. Why it is included? Because they are rendering services and for that they are getting paid. They are getting income. So such incomes are included in this method. Okay. Then we have fourth one, precautions, which is windfall gains. Windfall gains. Income which we get from such gains. What is the meaning of windfall here? It means we can say sudden or unexpected income. Okay. So such income, one example I will give you, income like we earn from lottery income. This will come under the example of windfall gains. Okay, so these income, or we can say such incomes, are not included in this method. Why this is not included? Because such incomes are called as, or such gains are called as capital gain. These are capital gains. And capital gains is not a part of factor income. Not only this, in this, production is also not taking place. Right? Then the fifth one is production which is meant for self-consumption. We can say self-consumption production. Is this included in this method? This one is also given in value added method, right? Now, production, even if it is meant for self-consumption purpose, it is included in this method also. Why it is included here? Because production is taking place. And because of this, there is a generation of income. Right? Okay. So this is included. Then, sixth, rent. Rent of owner-occupied house. Owner-occupied houses. Is this included in this method? Yes. this is included. In classification of factor incomes, I have taken rent, right, under operating surplus. Is that clear? Okay. So, see here, this rent is included. Whether it is a house which is occupied by the owner himself or it is for rental purpose. These things are included in this method. Is that clear? Okay. Or we can say rent is a part of operating surplus and this is included in factor incomes. So because of this, it is included in this method of measuring national income. Seventh one is income tax. Now this income tax should not be separately added in the estimation of national income because this one is paid from where? Out of compensation of employees. So in compensation of employees, the first one we have is wages, right? Wages and salaries, which is paid in cash. Now income tax is paid out from it. Okay. So if income tax is given, then this income tax should not be separately added in the estimation of national income because this one is paid out from this compensation of employees. Then eighth one we have corporate profit tax, we have dividend, we have undistributed profit. These three are the components of profits. Right. Now, if profits is given, okay, or if the profits is estimated in national income, then these three things should not be added. Is that clear? Because these three forms the part of profit. If we are adding these things with this, then it will lead to double counting. Is that clear? If profits is not given, instead of this profits, if these things are given, then what we have to do? We have to sum up all. We have to add up all to make it profits in this income method. Then we have last one. Same like this, we have wages and salaries, right? Likewise, we have payments in kind, employers' contribution to social security, as well as pension on retirement. All these things are part of COE. Right. So like same, I said here, it applies to this one also. If COE is given, compensation of employees is given, and also the part of it, that is these things are given, then you have to include only COE, not the part of it. Is that clear? If you are adding these things with this one, then again problem of double counting it will come. Okay. Now suppose if this one is not given, instead of this, these things are given, then what you have to do, you have to add up all these things to make it COA. Is that clear to you? Okay. So see here, these are some of the precautions that we have to take while measuring national income using income method. So brief recapitulation. The first one is transfer incomes are not included in this method. Reason because these are unearned income. Unearned income are not included in this method. Second one, income from illegal activities are also not included. These are black money. Okay. So black money are not taken into consideration in this. Not only this, apart from it, production is also not taking place. So I said if production is not taking place, there will be no income generation. Commissions, brokerage are included in this method. Reason why it is included? Because this is also will come under earned income. They are rendering services and for that they are getting back income, right? So this is also included. Windfall gains, sudden gains, unexpected gains, right? So these things are treated as a capital gains. And in national income accounting, capital gains are not included as a part of factor income. Is that clear? And apart from it, I said production is not taking place in this. Self-consumption production. Production which is meant for self-consumption purpose. These things are included. Why it is included? Because production is taking place here. And that leads to further generation of income. Then rent of owner-occupied houses. See here, rent, it is included. It is a part of operating surplus. So, it is included in this one. Then we have income tax. So, income tax should not be separately added in estimation of national income because this will come under where? In compensation of employees. This tax is paid from where? Wages. Okay. Then we have corporate profit tax, dividend, undistributed profits. These all are the parts of profits. If once profits is given, then we should not add up all these things. If profits is not given, then we have to add up all these things to make it profit. And profits are included, right? Then last one, wages and salaries, payments which is made in kind. All these things are the part of compensation of employees. If once compensation of employees is given, then we should not add all these things. If it is given there. Okay. If this one, compensation of employees is not there, then what we have to do? We have to add up all these things to make it compensation of employees. So, profits as well as compensation of employees is included in this income method. Is that clear? So, we have to keep these things in mind and then we have to work according to it. Now, I'll give you only one example, numerical examples of how to calculate national income using income method. Alright? See here, this is just one numerical illustrations of income method. Okay. Now, calculate net national product at market price, NNP at market price. Items are given, rupees are given in crores. Right. Now you have to see the data carefully and then let us see how to go about it. So I said COE plus operating surplus plus mixed income, right, will be equal to, it will make NDP at factor cost, which is nothing but domestic income. Right. Okay. So this is the base, or we can say formula, to compute national income using income method. Now we will go for first compensation of employees. So we will see whether compensation of employees is given here or not. In this it is not given here, right? Now what is given is the part of it. We have 4, right? So we will search all the 4 parts of COE. The first one is wages and salaries. So wages and salaries is given. Then we have social security contribution by employers, social security contribution by employees. 2 things is given here. So now which one we have to take? Employers contribution, right? Okay. So social security contribution by employers. This we have to take, not this one. Right? So we can say social security contribution by employers, or employers' contribution to social security. This is given. What else? Only 2, right? So wages and salaries. Then, yes. So these 2 we need to add up. Is that clear? Okay. These 2 are part of COE. Only these 2 things are given in this. Then we go for plus operating surplus. Is it given operating surplus? No. But the part of operating surplus is given. Right. So what is given here? Rent. So we say rent is given. Then we have rent and royalty, right? Royalty is also given. Rent, royalty. Then we have interest. Interest is given. Yes, last. Plus interest. I'll write it here down. Then we have profits. Yes, profits it's given. Okay. So, profits. So these things, rent, royalty, interest, profits, part of operating surplus. Okay. So we are done with COE plus operating surplus plus mixed income. Mixed income, is it given here? No, it is not given here. Okay, so this is, we will consider it as a 0 here. Is that clear? Okay. So add up all these things to make it this one. So we will first go for wages and salaries is how much? 700. Plus social security contribution by the employers is 60. Plus, then we have rent. Rent is given, which is 100. Plus royalty. Royalty is given 50. Plus interest. So interest, which is given 400, plus profit. Profit is given 300. Alright. So this will become your NDP at factor cost. So total, how much it will come? It will come around 16 1 0. Right? Okay. So now the question says we have to calculate NNP at market price. NNP at market price is equal to, now we have this one, right? NDP at factor cost. What we have to do? Now we have to go for conversion. So NN, same here, DN, N. This is domestic and this is national. So what we have to do? Add NFIA, NFIA. That is net factor income from abroad. To domestic, we will get national concept, right? Then factor cost, market price. So we need to convert this factor cost into market price. So what we have to do? Plus NIT. NIT has two components. One is indirect tax, another one is subsidy, right? Okay. Now see here, NDP at factor cost, we have 1 0. Now plus NFIA. Is it given in this? Now NFIA is what? It is the difference between net factor income earned from abroad minus net factor income paid to abroad. Remember this one? Already discussed before, right? So NFI is the difference between net factor income earned from abroad minus net factor income which is paid to abroad. Now see here what is given, NFIA. So we have this net factor income to abroad is given. See here. So you have to observe very carefully in this. So net factor income to abroad means this one, right? Net factor income paid to. One is from, another one is to. This you have to observe very carefully in the questions given. Okay. When 2 is given, what we have to do? We have to minus, right? So minus, now how much it is given? Net factor income to abroad is minus 20. Minus 20 it is given. Then plus NIT, net indirect tax. Is it given? Yes, already it is given here. 4. That is 70. Right, so how much it will come now? Will be right, 1,700. Is that clear? So this is how you have to go about it. And I said once in precautions that, say for example, if this COE is given, suppose let's take here like this. COE, compensation of employees, is given like 1,000 here. Okay, now observe here. Compensation of employees is also given. Wages and salaries is also given. Also, social security contribution by employers is given. So this one and this part of compensation of employees. If it is given, if this compensation of employees is given, then these two are not needed. Okay, so these two are already a part of this compensation of employees. Is that clear? So we have to take into consideration only this compensation of employee. If this is not given, then the part of it, whatever it is given, that all the part we have to add up. Likewise, same, operating surplus. Under operating surplus, we have, say for example, we have profits is given, right? Rent, royalty, interest, profits. Everything is given here. Okay. And with this, if operating surplus is given, say for example, same, 800 something. If it is given like this, so again, the part of it should not be added. We have to take into consideration only operating surplus. If this is not given, then what we have to do, the part of operating surplus, that is rent, royalty, everything, we have to add up to make it operating surplus. Right? So these things we have seen in precautions. Likewise, same, here profits is given. Right? So in profits we have three types. So if with profits 3 types are given, what we have to do? We have to consider only one. That is this profits, not the parts of the profit. If this is not given and the parts are given, then we have to add up all to make it profits. Is that clear to you? So this is how you have to go about solving numerical illustrations of this method. Right.